Hi, thank you for joining us today at HAI at Work, our webinar series. Today we are addressing insurance, aviation insurance, and how risk mitigation delivers favorable insurance rates. Sorry about that. I'm going to jump right into things. We've got a great panel today. Coming to us over phone is going to be Jim Viola, the president of HAI. He is attending the Experimental Aircraft Association AirVenture at Oshkosh right now. We also have Jim Gardner, who is the president of the James Gardner Company. He is a co-chair of the Aviation Insurance Association Safety Committee, and he is also the past president of the Aviation Insurance Association. Joining him today is Jason Stark, who is the Director of Safety for Baldwin Aviation. And Jason is also a member of the Safety Committee. Come back to the second. This is an interactive webinar. We do appreciate your taking the time to watch this. And so we know that you probably have questions about insurance. The best way to respond to your questions is to use the question and answer module that's either on the bottom or the side of your screen, wherever you might have moved it. We do try to pay attention to the chat feature, but the question and answer module is going to get the most attention. This video is being recorded. We will try to provide the link to this as fast as we can. It's usually the next business afternoon, but it could be as late as Monday, depending on how fast things render. So now, please, Jim, go ahead and bring your microphone on, and let's see how things were going in Oshkosh.
Well, thanks, Dan, and thanks, Jim and Jason, for being on here today. Certainly, as I make the rounds here and I talk to members, we talk to people that come by the HAI booth that fly helicopters, you can't have a conversation without somebody mentioning insurance. So I really appreciate the opportunity that you come on and try to explain it a little more clear and what we can do and let people know, you know, we are all working together to mitigate the risk and make flying safer, so that again we can help by bring down the insurance costs. But I will let the experts talk to you now, and I do appreciate everybody tuning in today. And Dan, the good job you do getting this recorded and back out there for those that aren't attending right now. Thanks.
Okay, Jim and Jason, please take it away. I'll stop sharing and close my camera.
Okay. If y'all just bear with me just a moment, I'll be sharing my screen. If I can figure out which one I'm going to share. Here we go. Let's try this one. Does that work?
That looks good, Jim.
Okay, thank you. The Aviation Insurance Association is created the Safety Committee, and one of our purposes is to help educate the general public, the flying public, on aviation insurance, as well as help underwriters and brokers better understand the implications of what we do with our clients. So we have developed through the Aviation Insurance Association Safety Committee, which is about a 25-man committee of all the disciplines in the safety and insurance world to try to bring message to you, and we're glad to be here. I'm Jim Gardner. I'm a broker with my own company I established 11 years ago, and Jason Stark is the Director of Safety for Baldwin Aviation, and we're going to try to give you some information that you may find useful. Quick overview of what we're going to do is a 40,000 foot view of the aviation insurance world. We're going to cover some risk elements of risk. Jason's going to cover some accidents and some risk mitigation solutions. And then what I want to come back to and answer the question, why should you spend a lot of money on risk mitigation practices, to wrap it up? 40,000 foot view is this. In 2005 was the end of the hard market and the gradual start of what has become the soft market. And at the height of the hard market, you had 8 insurance companies, and The rates were as high as they were ever were. The profitability of the insurance industry was very good, even though we had just gone through the black swan event of 9/11. So as we look forward, where we are at the bottom of the soft market, and I will say a soft market at full maturity, there were 18 markets, as you see here, all of which had a very broad view of what they were doing, and there were plenty of markets. There were more than enough markets. Competition was very robust, and that may or may not be a good thing. Depends on who you are. But 10 years of a soft market was characterized by a departure from risk management underwriting in favor of market-based total premium preservation underwriting, resulting in, among other things, insurance rates well below profitability and sustainability, some of the lowest rates that had been seen in the recent past, and the relaxing of training and pilot experience standards and operational standards that allowed you to not face some of the mitigating circumstances that you're seeing now. I mean, that's very good for the operators, not so much for the underwriters, but downright awful for loss ratios. What I want to do is show you kind of what led to where we are in a graphic point of view. Blue represents loss, this the pure cost of loss. As you see, 2009, we're below this critical 60% mark, which generally defines pure profitability. But just that, you have to add back in what's called actuarial losses, where $50 million losses are spread over time. And you add the brokerage of the, in other words, the marketing of the administration of the policy. You have to add taxes, and then you have to add in commission ratios. All of these things have remained relatively stable. But look what happened. If you think if 90% is where the profitability has to be in order for an insurance company to be profitable, the last year the insurance industry was profitable was 2009. In 2016, you were losing 5 cents on every dollar of insurance premium you collected. And as you well know in a business, that's not sustainable, but it got worse. 2016, 2017, and 2018, which is kind of the bottom of the soft market, they were losing upwards of 17 to 20 cents on the dollar for every single dollar in premium collected. What does that do for you? That's really great for you because your insurance was cheap, but then again, it wasn't good for you because without a solvent, strong, and vibrant aviation insurance market, there's not going to be money there to pay your claim. So the effects of the soft market, the insurance rates were well below profitability. Insurance companies were losing 17 to 20 cents on the dollar, which is unsustainable. And a departure of several insurance companies from the aviation sector and mergers due to unprofitability shrank the market size. In an effort to reduce these losses, the return to profitability, each insurance underwriting company continues to independently go through a process of review and evaluation. They evaluate their current book of business, what they're writing, what they're insuring. They have accordingly a change of appetite for those sectors which they perform poorly in or unprofitable to them. And most importantly to you is they have returned to a risk management underwriting practice. In other words, they want you to know you and to require you to operate your ship better. You're going to see that through open pilot clauses and other training requirements, experience levels, and things of that nature. Underwriters' most immediate goal after 2018 was to return to profitability as soon as possible. Many of you saw increases. They varied from company to company. They varied from market sector. But some of y'all saw 50 and 100% increases in 2019 and 20. And believe it or not, that was a segmented or graduated approach to where they needed to be because they were so far underwater. Where are we now? Well, in 2005, the aviation insurance world was a $7 billion industry. In 2018, probably hit the bottom of about $4 billion. Now, how does that relate to the rest of the property and casualty market? Well, I would speculate in Atlanta, where I live alone, there's $4 billion in premium just insuring homes, buildings, cars, and things of that nature, not to mention the rest of the world. The aviation insurance world is extremely small. And even though you've seen those rates increases, 2022 revenues suggest that we're still losing $600,000 or more. And so we're not back to profitability quite yet. In order to sustain itself, the insurance industry needs several years of profitability and stability to be properly capitalized for a catastrophic loss. Where are we today in markets? Well, we've got 15, and that doesn't seem so bad on the surface. But take this into effect, is that all of these markets, and there's one market that's not in there, Great American, all these markets, and for that Great American, I apologize. But for all these markets, each and every one of them has an appetite that is different. They have liability limits that they can offer that are different. Some love helicopters, some hate them. Some love owner-flown helicopters, some don't want any owner-flown helicopters. So the market is a lot smaller than you might think. Even the addition of a new market, it doesn't seem to be going to affect the aviation insurance world for the rotor wing segment. Bottom line, premiums you enjoy in 2018 and prior are gone, and they're not going to return. They were driving the aviation industry into and towards insolvency, and that was unacceptable for you as well. The marketplace is smaller than it looks when you take into effect the differing appetites for the different market segments, and the rates increases appear to be leveling off, but not peaking. Operators with poor loss records or in riskier operating environments are being surcharged, or they're being non-renewed, and the insurance companies are getting out of those segments that are not profitable to them. The number of claims, inflation, supply chain issues for replacement parts, huge liability awards are driving the cost of claims up, which is not helping. And uncertainty in the marketplace, the world economy, and the political instability will still prevail and drive rates upward. Risk mitigation practices remain your best protection against the cost of an accident. So you ask yourself, I've never had a loss. Why are my rates going up? And the answer is simple. The aviation insurance sector is so small compared to the rest of the property and casualty insurance world with extremely large exposures to losses. The law of big numbers simply does not fit the aviation insurance world. There are simply not enough of us to make those numbers fit like you would in the automobile industry. And we're very small. Therefore, we depend on all the premium from all the sectors of aviation insurance. You are contributing to the same pool to pay all losses. And that's why we're all in this together, whether we like it or not. And that's why, even though you've had a clean record for the last 10 years, your rates went up commensurate with everybody else. Those other poor operators, believe me, have seen much greater increases than you may have. So the elements of risk, before I turn it over to Jason, this is my favorite slide. This applies to everything in life that we do. It certainly applies to aviation insurance. Risk avoidance, don't do it, don't own it, don't buy it, don't use it. It's too late. You own a helicopter and you've got to retain some risk. Brings us to that element of risk retention and mitigation, which goes along with it. Retention is your exposure to risk due to your style of operation, high deductibles, the liability limits you carry, just the exposure of operating your helicopter out in the public world. Mitigation. Those are your operational safety, training, management practices and requirements that you use to reduce the propensity or your susceptibility to having an accident or an incident. And then there's risk transfer by contract or to the insurance. An insurance policy is a contract, and the insurance company is saying, I'm going to take on this amount of risk from you for this amount of price. But guess what? The insurance companies are using risk mitigation more and more and more. So they're looking at the same things you are in order to try to reduce the propensity for them to lose or have to pay a claim. As Jason goes through his scenario and his presentation, I want you to ask this question. Why should I spend a lot of money on risk mitigation and safety practices and programs? And we'll come back to that later. Jason, it's all yours.
Never done that before and put myself.
There you go. Never done that before.
Yeah, never done that before. But I think that was a great segue, and that question or what they're to think about and the numbers we're about to see, I think sets the stage for a good reason for risk mitigation. So if we could go to the next slide, please. So what you're looking at here are the total 2021 events meaning accidents and incidents. This did come from the Aviation Safety Network as the source of this data. And what we see is that we had 120 total events. Of those 120, 115 were accidents, 4 were incidents, and 1 was unknown. But we had 55 fatalities due to these accidents and incidents in 2021. So there was plenty loss of life. If we go to the next one, please. This is showing here for 2021 the events, again, which are accidents and incidents by aircraft type. You'll see a wide spectrum of ship types here, but you'll notice at the bottom the longest graphs for the R44 and the Bell 206. Just as a caveat, these are not rates; they're pure numbers. So it's not saying that necessarily either one of the ships are problematic. It's just saying they might have more exposure, more operating time. We don't have the rates for that yet. So, but it gives you a sense of what's happening out there and where that exposure is. Next slide, please. In 2021, we looked at the accidents and categorized them by the nature of the operation, or basically their mission. And as we go down towards the bottom, we have a slight spike in unknown. There was no category assigned to it, but you see that private operations, training, and agricultural are probably the top 3, I would say, in 2021 as the data pulls in. Now there's something interesting about this slide, and for a second, just ignore the numbers, but look at the shape of the graph. When we look at a study that was done by the U.S. Helicopter Safety Team, they looked at 10 years worth of data from 2009 to 2018. And interestingly, they found that even though air ambulance, which you see up there as having a total 1 accident for 2021, even though air ambulance flies about 16% of the industry's hours, they only account for 7% of all the accidents and incidents in that study period. Conversely, when we look at private operations, which you see at the bottom of my graph there, which is the 45, when you look at private operations, their study found that the private operations accounted for 22% of the total accidents in that study period. So considering what that study found and looking at the shape of this graph, it pretty much is similar. So we haven't seen in their study period from this year that a lot has changed in terms of proportionality. So I thought that was very interesting to point out. Next slide, please. Here we have for 2021, the events as they're categorized by causal factors. They were broad categories, but again, just to give a sense of the landscape, if you will, of what is contributing to the events that we saw in 2021. And we have the leader there as controlled flight into terrain at 35, and then loss of control in emergency operations coming in the bottom two there. There was 21 that were unknown, they were not categorized. And then you can see, which is interesting, third down, drone strike. And that's something that's emerging in our industry now, both in fixed and rotary wing. So I'm curious as to where that number is gonna go in the future. But you have two drone strikes in 2021. So that's interesting, something to keep an eye on. Next slide, please. And just real quick, we're not all the way through 2022, and the events that were available on the Aviation Safety Network, they weren't fully investigated or fully categorized, but in a sense, they did discern between accidents and incidents. And up to July 9th of 2022, we were looking at 52 total events, which comprised of 52 accidents, 0 incidents, and so far 57 fatalities, which is not good. So next slide, please. Now we're going to move into just talk briefly about risk mitigation in your operations and kind of the point Jim brought up when we're talking about insurance, taking a risk-based approach to underwriting. In order to mitigate or to effectively and efficiently mitigate risk, we have to really know where the problem is. And so when we looked at the 2021 accidents, we started breaking them up by the type of operation and looking at on the x-axis, this particular graph, the causal factors. And this is a Pareto chart. So if you follow that green line, it gives you an indication of where the proportionality of the data is. So in this particular graph, it's showing the accident causes for private operations. What it's saying is that controlled flight into terrain and loss of control comprised about 80% of the accidents for private operations in 2021. Let's go to the next segment, please. Here is the 2021 accident causes for ag operations. Again, following the green line, looking at the 80% point, they all fall about into controlled flight into terrain. And when you consider the nature of that operation, it seems to make sense that impact with terrain would be something pretty germane in that segment. So next segment, please. This one was interesting. This was for training operations in 2021. What we see is a big category of unknown. They didn't know how to classify what happened at the time when I pulled this data. But we see that as far as loss of control, and when you consider flight training and the probability of that happen, that accounted for 70% of the accidents in the training regime. Next slide, please. So we looked at these different segments and looked at where we could potentially focus our risk mitigation actions. And in the industry itself, there are some common risk mitigation strategies, and we've seen them being increased, improved knowledge and skills training, develop and implement SOPs. And one of the interesting ones is establish a robust maintenance program. We want to tie this to yet another study that looked at helicopter data between 2005 and 2015 as far as accidents or causal to accidents. And it was found that 14 to 21% of the accidents were actually due to faulty maintenance practices or inspection practices. So establishing a robust maintenance program obviously is a big factor and can be a big factor in controlling risk in your operations. Going on down, establishing a safety management system. We've seen all the talk about SMS and where it is in the industry. It is here to stay. It has shown promise in many other different segments, and it is something that is intended to be scalable from a 1-ship operation to a 100-ship operation to help you understand your risk. But I think a lot of it boils down to leadership in your organization. The leaders here, or the leaders that or even just being a safety leader, but being able to really practice what is supposed to practice appropriate behavior or walk the talk as it is called. Next slide, please. So kind of delving into safety management systems, what really, quote, comes to mind when I think of SMS is from Shane Parrish. He said, the map is not the territory. And what that's saying is that the map is an abstract and it doesn't really show the details or the nuances of the territory. And when I look at the industry sometimes, and especially look at the CFRs, it's kind of a broad brush approach. And it's not really potentially addressing what's really pertinent to your operations, pertinent to your environment. And the safety management system is meant to do that. The SMS itself is proactive. And that's one of the biggest features about the safety management system. It's not the days where, you know, the safety individual would sit in the office and wait for something to happen and be told to fix it. Today, it's going out and looking for those things that can emerge and that can cause damage or end lives within your operation. So when we look at the use of the safety management system, you know, it's no longer the focus on the big events necessarily, but we like to identify these precursors to it. And it could be the little stuff. And as Jim in his latest paper that he authored said, even the little stuff hurts. So this little stuff can compound into bigger stuff, and safety management gives you the tools to identify that. The other big part of safety management systems is identifying the best control strategies. And that comes into the next slide as well. But when the safety management system begs you to understand your operation and understand the environment in which you operate, and then being able to address risk with a control that best suits your organization, that's most efficient and effective for your organization. And ultimately, with what you find in your safety management system, and we see this in other segments as well, you can influence industry best practices and manufacturer best practices through manufacturer interest groups. So when we see this, and even if you look today, they're out there. There's so many best practices directed at controlling risk within your operation. Next slide, please. So getting back to this point about one of the benefits of safety management is being able to develop meaningful controls. We look at some of those common controls: training, flight training, hiring practices, maintenance practices, whatever it may be. They're pretty broad. And when we look at the controls that are regulated through the FAA, they're considered minimum. When we have an understanding of our operation and have an understanding of the risks that we're facing, we have the ability, we have the data and the information to create controls now that are not broad brush, that are focused, and controls that work for us, that are not necessarily imposed on us, but that actually work for our organization to allow us to operate in the environment we need to operate with a full understanding of the risk and the mitigation of that risk. And it's the SMS, it's the safety management system that provides the organization with the tools to do that. When we're thinking about SMS, or you're thinking about implementing safety management into your organization, you're not alone. I mean, other segments are in it, but specifically the HAI has many SMS tools. They have the SMS initiative, which gives operators access to tools and consulting to help you implement the most appropriate safety management system for your organization. So Jim, back to you.
Sure. So a lot of people ask, okay, I'm spending all this money. Will I get a reduction in my insurance premium that will pay for the risk mitigation practices? And the answer is a resounding no. But consider this. The cost of an accident goes far beyond what your insurance will pay for. There's a couple of cases to look at when we look at this, and use the case of a total loss and what you just saw, and then the case of a partial loss. And I got this disclaimer to say the values and numbers that I chose to use are purely for illustration only, and to illustrate the impact that it could have on your claim, and not necessarily correlate to the real world costs of repair, salvage, values, and numbers. Quite frankly, I'm not good at math without my calculator. So you'll notice some very round numbers. It's for illustration only. So let's just assume that you have a whole value of $1 million. If the cost of a claim, the repairs, plus the salvage value exceeds the whole value or agreed value on your policy, the insurance company to write you a check for $1 million less the deductible. And the insurance company is going to own the helicopter and all of the permanently attached equipment, including your avionics and that fine Corinthian leather seating that you have. What's the deductible? It could be 2.5% if you're lucky, 5%, 10%, or more. You could be out $100,000 on a total loss. So let's talk about a partial loss. And here are the assumptions I make. The whole value is $2 million, not $1. The deductible is 10%. The time compliance components are 50% through their useful life. The total cost to repair or replace a rotor is $100,000. The replace a rotor head is $100,000. The total cost to overhaul and replace transmission is $100,000. And the total cost to overhaul an engine is $100,000, all of which I am assuming are time compliance components. The total cost of the other costs incidental to repair or damage the hull of $200,000, and then the total cost to repair $600,000. The salvage value is $750,000. So you see by our formula, this is not a constructive total loss, and this is where the principle of betterment is going to kick in. And this is something you need to understand. The insurance company is responsible for putting your aircraft back in its original condition the moment before the accident. Not better, not worse. And to do that, it's going to require them to look at the time compliance components in your ship. 50% of the cost, since we are 50% through the usable life of those components, the rotor blades, the rotor, the transmission, the engines, they're going to reimburse you for. They're going to reimburse you for 100% of the cost of putting the ship back together. Remember, by looking at this, your reimbursement check might be $200,000. There's a total repair cost of $600,000, less the 50% time compliance adjustment of $200,000, less the deductible. That leaves you with a reimbursement check of $200,000. So you see, there is a lot more to an accident and out-of-pocket expenses than you might suspect. Your answer, should I spend the dollars on risk mitigation practices and programs? That's entirely up to you. Everybody has their own ideas about whether they're going to have an accident, but the most surprised person in an accident is the guy that has one, because he really didn't think it was going to happen to him. Final thoughts. Transference of insurance carriers is not as cheap as it used to be. Insurance companies are requiring more than ever helicopter companies that take responsibility for identifying and mitigating the risks in operations. Helicopter operations are characterized as higher risk operations in the aviation segment due to the actual and potential operating environments. Safety event data suggest improvements in mitigation are needed. Training, improved maintenance, et cetera, are all mitigating or risk mitigation factors. Some have more impact than others, but they all contribute to the operation of the aircraft. The implementation of SMS safety management systems helps operators understand the risk in their particular environment and create appropriate controls and risk mitigation practices. And the cost of developing and deploying the risk mitigation is minimal compared to claims associated with even the most minor events. So, questions? I see a couple on the board. I've got one. If I can read this, most injuries and aircraft damage occur without an incident of flight. So they do not make the accident statistics. How does the insurance industry manage those risks? Well, they manage what they can. And using risk retention and risk mitigation underwriting, they look at you, they look at the pilot, they look at the training of your operation, and you get, sometimes you just get placed in a broad brush form. They want to look at your loss histories and the frequency of your losses. So that's how they categorize them and actuate them. Rather than, when you look at accident statistics, it's always historical, and underwriting really is done as a manual basis. It's not automated, and it's done on a best guess based on past history. So that's how it's done. It's not an exact science. How would a robust maintenance program be related to mitigating control flight and terrain accidents? Well, let's just say that you're managing a maintenance problem or an engine that's kind of acting up a little bit. It's still flying, but your attention is distracted and you are flying lower to the ground. And, these type of things do happen. So anytime that you have a maintenance issue that distracts you from the operation of the aircraft can do that. The classic case of this happened at my old alma mater, Eastern Airlines, back in the 70s, the controlled L-1011 flight into the terrain when all three pilots, two pilots and the flight engineer were focusing on a gear light. They forgot to fly the airplane and it flew right smack into the Everglades. To me, there's probably thousands and thousands of others where you've been distracted. So that's my answer to that. How would others than reputational damage, the other issue with a total loss is the need to replace the aircraft if you intend to stay in the business. Didn't even want to bring that up. There's a lot of things that you can go into the total cost of an accident. But if I were an organization that had a flight operation, I think that I would go through the exercise of having an accident, the emergency response planning that you might do, just the people problems that you might have, especially if there were injuries. So yes, and you've got loss of use, which is not covered by insurance. You've got a full litany of other things that are additional cost that you might have. And the helicopter and the aircraft market is today, your aircraft may not be insured to replacement cost.
I think you answered.
And I think that answered Michael Ott's last question there. So
yeah, I was going to say, I think you answered the questions that came in, Jim. I do have a couple of other ones. When I'm not a pilot, I don't own an aircraft, but I do have car and I do have car insurance. For me, it's almost like a set it and forget it. I pay the premiums when they're due. Is there a value to having an aircraft owner contact their broker, their agent, and talk, on a routine basis or a regular basis, maybe once a year, maybe every 6 months? I just, I know they talk about if you make changes to your car policy, it makes sense to talk with them. But what about for aircraft?
Well, I regularly talk to my clients 2 to 3 months prior to the renewal process. And what I want to know is, what other training that they've done. I want to get an updated pilot history form on them to annotate the training that they have done, the schools that they've gone to, whether they've gotten some specialized training. We want to review the value of his aircraft. I want him to look at, is his aircraft insured to the proper value? Is it underinsured? Is it overinsured? And then we talk about the trends in the marketplace and any special needs that he has. He may have a special training need. He may have a pilot that he's grooming that needs some attention by the underwriters and permission for the underwriters to make exceptions to the open pilot clause, things of that nature. So yes, there in the aviation world, there should be a good, strong discussion with you and your broker prior to getting it.
Okay, we have a couple of more questions come in. One is, there are many safety enhancements that have become common on newer helicopter models. Some of these are also available as retrofits for older models through STCs. How does the insurance industry evaluate the risk of OEM-provided safety features versus aftermarket modifications providing the same or similar capabilities?
Well, I think that they review them favorably, whether they're OEMs or aftermarket. To be candid with you, the first thing you got to do is tell your broker that you've added these things to your ship and looked at increasing the value, because those safety related items have value and add value to your ship. But you've got to tell the underwriter that that's what they're there for. Some underwriters actually have a system by where they give a discount for automation, whether it be an autopilot, whether it be heads-up display, or whether they other items like that. Some don't. So it depends on insurance company to insurance company. But yes, tell your broker, because if you don't tell him, he doesn't know to pass it on.
I have a question from Drew. Something to bring up. In 2022 alone, we've seen something, let's see, it's scrolled out, $53 million in rotary wing hull losses alone. Do the insureds feel the pressure from a safety aspect, or is it really coming down to dollars and cents for insurance?
That's a good question. At the end of the day, insurance is a pure money issue. At the end of the day, when you add it all told, and in the aviation world, does it hurt? Yes, it does, because we're dipping into the same pool of money to pay those claims as we are to pay the airline claims, as we are to pay all the liability losses out there. It's the same pool of money that would be paying for any of the black swan events, whether it be the confiscation of aircraft in the Soviet in Russia, or the Boeing thing, or any other events that you might see. So the insurers probably are going to feel that pressure, and they're probably going to see the overall increase in the premiums as we go forward. It's going to affect them, yes.
Okay, we've got a question from Paul, and I might ask Jason to provide some background on this one too, or something. But please explain how SMS program that is designed primarily for commercial, multi-pilot, multi-aircraft operators can be implemented to help with the high loss ratio of a private owner pilot.
I'm going to let Jason answer that one, yes.
That's a great question. That question's asked a lot. And without getting too much into the background, when ICAO first put forth the standards and recommended practices for safety management, which eventually made it to the FAA and into the industry, ICAO's primary focus has been, since its inception in 1944, is commercial traffic. So it's been presented in that way, and not rightfully so. And we kind of see that in part 5 too, which is a whole different webinar. But the idea of SMS, the idea of safety management is scalable. And when we look at the bare bones of it, as it was first presented in Annex 6 Part 2, but it's this idea of formalizing a method, even if you're by yourself in the helicopter, of identifying what you do in every flight, like, hey, that could have gone wrong, or that could have gone south. And rather than just put it in your head and let it go out, to actually maybe document it or put it somewhere and then look at it and say, well, how could have that gone wrong? And what could have I done to prevent, a consequence if it should go wrong, or reduce the severity or the probability of that consequence? So that's very doable by single pilot operators. And even tracking within your flights, your analysis of yourself, how you perform, any slips, stops, mistakes, whatever it may be. And over time, seeing if there's a pattern, is it getting worse? Is it getting better? That is very doable. by a single pilot operator. And doing that is actually safety management. Safety management is nothing more than a deliberate look at what safety or how your risk is panning out, what margins you have, and what you need to mitigate and what you need to reduce. So it's a great question, and I'm sorry it hasn't been presented that way necessarily so well in the industry. But the spirit of SMS is to be for the single pilot operator to the multi-crew.
Okay, thanks, Jason. Well, our next question is from Jorge. The risk mitigations highlighted were focused on maintenance and operations SMS. What about, and this is kind of a question that Drew asked a second ago, what about equipage of rotorcraft with systems that could help reduce accidents or improve occupant survivability should an accident occur?
Jason, you want to tackle that one?
Well, you're talking about reducing risk or insurance rates?
About reducing risk.
Yeah, so about reducing risk. When we look at some of the accidents that we saw and how they broke out by segments, the equipage of with special systems, like ground proximity or any of those other systems that can help mitigate those types of risk, obviously would help and would reduce the probability of an accident. But then on the other side, reducing the severity of an accident, I would think retrofitting with the appropriate safeguards to protect occupants should an accident happen. I think, am I getting the spirit of the question there?
And I've got something to add to that as well. From an underwriting standpoint, and sometimes if you're deploying these systems, enhanced safety systems, again, it needs to be brought to the attention of the underwriters. Many times, if you're operating multi-ships that have got a larger operation, the underwriter coming to visit you and seeing these things. But it's not only the equipment that it's installed there, it's also the training to operate and best use this equipment. Sometimes if you've got a new pilot who doesn't completely understand the systems that are before him, he doesn't know how to use the magic. He doesn't know how to understand it. And sometimes it can be downright distracting. So when the more sophisticated the ship you've got, the more robust training that you need on those extra safety items that you're talking about.
Okay, I see we had a question from David that kind of followed along the same as Jorge and Drew, so I think we might jump to that. David, if you did see, have something specific you want, go ahead and throw something back in. We have a question from Paul. Can you explain to us the helicopter industry, how the recent Boeing product liability losses and other non-helicopter industry losses really affect the relatively small helicopter industry rates?
And I'll take on that one. I'll go back to the law of big numbers that we've talked about. The pool of money that the entire aviation world has is extremely small. We're all in this together. You are paying into the pool as well. So when the pool gets depleted, everybody's rates are going, some are going to go up more than others, some less, but we're all going to suffer until the industry gets back to equilibrium. And the other aspect with helicopters is you are very small, and so the impact may seem disproportionate to you. But at the end of the day, we're all putting money into the same pool, and the accidents are being taken out of the same pool.
David did have a follow-up. He was asking, says AIG will no longer insure helicopters without CRFS. Will this become a trend, do you think? The crash-resistant fuel systems.
That's going to be an individual insurance company basis. It's going to go insurance company to insurance company. And that's what I'm talking about. Each one of the insurance companies are evaluating their own books, their own lines of insurance for their particular aviation markets. And each one of them, they look at risk in a different way. So if one insurance company says, we're not going to insure you unless you've got a certain special equipment that's normal for your type of operation, then that's their choice.
Matthew had a question. Do threat and error management correlate to SMS?
Take that one. That is a fantastic question. The short answer is yes. Threat and error management itself is a construct, but it is kind of the essence of SMS, being aware of the threats and then being aware of the recovery actions before it does end up in an event. But TEM itself is a great mitigating force, because TEM advocates for things like crew resource management, single pilot resource management, in order to mitigate the threats and contain before they become errors and undesired states. So yes, there is a very high correlation between threat and error management. I would almost argue to say that TEM could be a tool as part of SMS. But yeah, fantastic question
though. Looks like Gabriel Amato, one of our longtime viewers, has a question. Might be looking to expand his fleet down in the Caribbean. Would a more mature helicopter like a BO-105 with 50 years of ADs and improvements and a very low accident history be less expensive to insure than perhaps, say, a brand new aircraft?
Well, you've got two factors that you're staring at here. One is the cost of the insured value of the helicopter, which does impact the rate. So if you've got a helicopter that's worth $1 million, the total premium is going to be less than if you had a helicopter worth $10 million, no doubt about it. The problem that the 50-year-old helicopter is going to have is the age factor. Some insurance companies will not insure anything over 20 years old. Some will go to 25. Some will go to whatever you want. Then you're looking at, okay, the maximum hull value that they would do it, because some of these ships have low hull values, and just about anything you do to it's a total loss. And the last factor that you're going to see is their willingness to offer anything more than minimal liability limits. So all those things are going to come into play. You just have to evaluate your operation and see which one works for you.
Okay. Okay, I think Gabriel.
Oh, I see where she said 50 years of experience. Oh, yes. And let me go back and I now understand.
Yeah,
yes,
so do I.
Yes, a long-time helicopter manufacturer with a long history and a clean history is going to be looked at favorably. The newer helicopters out there, let's just take a home built or an experimental versus a Bell. I mean, of course, the Bell is going to be more favorable than the experimental or the home built. I mean, those are the two extremes. So yes, it does make a difference.
Okay. There was, let's go with just one final question. This came in from Matthew a second ago, or a few minutes ago. Kind of want you guys to look into the future. What impact do you see on rotary wing insurance rates and underwriters' appetite for risk from the expansion of the unmanned urban air transport sector?
That's a good question, and my answer is I don't know. I mean, it's a new area. I will tell you that there are people who are very high up in the insurance food chain that are looking at these things. Reinsurance companies are looking at these things. What are we going to do in the future? How are we going to rate it? How are we going to mitigate risk? Those are all factors, but I don't think that any one person can give you a crystal clear view of what's going to happen there.
Okay, gentlemen, I think that will wrap us up for today. I am grateful for your time in putting this presentation together and then coming on to today to not only give the question, but to spend 20 minutes answering questions from our audience. Can't tell you how much we appreciate it when people give back to the industry like this. Thank you so much.
Well, I, on behalf of the Aviation Insurance Association and the Safety Committee, we're glad to do this anytime. We are very interested in engaging with the Helicopter Association International and doing what we can to educate our underwriters, our brokers, as well as the operators. So thank you very much for allowing us to speak.
Yeah, thank you.
They appreciate it so much. Jim, Jason, please enjoy the rest of your day. Thank you so much.
Thank you.
We'll go ahead and just wrap up with just a few things. Save the dates, upcoming webinars. We did a shift to a new schedule. We are now looking at twice a month rather than every single week. Our webinars are scheduled for the 2nd and 4th Thursdays of every month. Upcoming topics, August 11th, we have a workforce development presentation. Looking forward to that. That's with Gretchen Bailey Johnson of OneSpan, a subject matter expert on workforce development. Really looking forward to hearing that one. As everybody knows, we are experiencing a huge shortage of pilots and mechanics, something I heard over and over and over again when I just was at EAA Air Venture in Oshkosh this week. And then we've got a couple upcoming topics. Flight Suit Friday is a podcast by some Coast Guard pilots, and they get in some really interesting discussions, and they happen to be here in Washington, D.C. a little while back. And so they did an interview with Jim Viola, the president of HAI, and so we shot video of it, and we think that it would be something you guys are going to enjoy. We also have upcoming a one-on-one, a CEO to CEO interview, if you will, with Clyde Woltman. He is the brand new CEO of Leonardo, which I horribly misspelled in my slide. Feedback, we do have a questionnaire we'll be sending out to each of you shortly. We would appreciate if you could take a few minutes to look through the questionnaire, answer the questions. Particular interest to me is if you have any ideas for upcoming subjects for our webinars. We're always looking for ideas that are important to you. Speaking of which, HAI also wants to know what is important to you, what's going on in the industry, what should we know about, what areas can HAI help you with, what areas have we not been addressing, or what areas have we been spending way too much time on, in your opinion. Regardless, please take the time to send an email to Jim Viola, president@rotor.org. He does read every single email, and when it's appropriate, he does task the staff with responding to them. We know that our webinars provide a lot of information. Don't always know that everybody is aware. We offer free subscriptions in the US to Rotor Magazine, and just a small fee for international shipping if you're interested in Rotor Magazine. Rotor Daily is our daily news aggregator. It comes out every business day during the year, and that compiles stories from the rotorcraft industry from around the world. There's usually between 10 and 20 stories in Rotor Daily, and Rotor Magazine literally is an award-winning publication. If you're interested in subscribing to either one, just go to rotor.org/subscribe, and you should be able to sign up without any problem. The magazine is free. Again, if you're in the US, small fee outside. There is no cost for Rotor Daily whatsoever. That does conclude our webinar. We are grateful that you took time out of your schedule to watch today. We know that, especially right now, there's a lot of people flying and staying very, very busy. And so we're grateful that you took the time out to watch today. Until next webinar, please be safe and please fly safe.